Now, if you suppress gold, you can't let silver skyrocket. So they suppress silver. But silver is easier to suppress because it's such a small market. They got used to being able to smash the price, scare the speculators out, and then they made a profit. But overall, it was not profit motivated. It was simply suppression motivated so that these governments, particularly the US government, could borrow in unlimited quantities. If gold and silver are not going higher, that means the thermometer is not showing a fever. So if you break the thermometer, you can say there's no fever, gold bad, dollar good. Now the thermometer is breaking. The paper contracts, they sold way too many, and we're at the point now where people are standing for delivery, and guess what? The metal doesn't exist to supply all these contracts that have been sold short. Now you're seeing price go higher and these banks are losing billions of dollars.
Gold and silver kick off 2026 with a surge, building on 2025's historic gains. Gold targets $5,000 per ounce amid rate cut hopes and global risks. This rally screams urgency. Supply shortages are real, pushing prices higher fast. Renowned analyst Bill Holter, a former Wall Street manager and expert in precious metals, joins us to break down why this is happening. He explains that for 50 years, the paper market has been used to suppress prices to protect the dollar, but the thermometer is finally breaking. With demand now far outstripping physical supply, are the big banks on the verge of a multi-billion-dollar collapse? Watch to find out. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Yeah, we've been in a supply deficit for, 5 years now. That started to come to a head. Whatever available supplies had been used up. And as people understood this was happening, demand increased. If you go back, 3 years ago, when the Russian Treasuries, the 300 billion, were basically sequestered, that's what kicked off the move away from dollars and central banks wanting to buy gold to basically hedge. They're thinking if Russia can have their reserves stolen, so can we. So if you look at a chart, the following day, gold started to look like a tractor in first gear. Now, silver is not just a monetary metal. I mean, there's industrial uses, medicinal uses, technological uses. All that demand overwhelmed the above ground supply. And as you mentioned, what the mines are producing is roughly, call it 850, 900 million ounces. And it looks like this year, we're probably going to end up with a demand of 1.3 billion ounces. So there's your shortage. And when you tell a human being that they can't have something, they want it even more. And what you're looking at now is the paper markets are beginning to break. And we're moving toward more of a, like you said with that commercial, I want my money and I want it now. We're moving toward a cash and carry market. The Asians do not trust contracts. The Asians want to buy something and have it delivered. And there's your problem. That's the only way to adjust the supply and demand, the only way to ration demand and increase supply, but slowly, because mines can't increase supply quickly. The only way to do that is to increase the price. And that's what you're watching. The shorts, I do not believe, understand that this has been going on for 50 years, or at least since 1986. 1976, when the COMEX started and they had the paper contracts. Understand that silver is an extremely small market. Even at today's prices, I think the total global production is only 40 or $50 billion a year, which is nothing in today's world. I don't believe that it was profit-oriented to begin with. The central banks colluded around the world to lease gold and have that gold sold into the market to suppress the price. The reason that was done is because gold is the anti-dollar, if you will. It's the anti-fiat. It's direct competition for fiat currencies. Now, if you suppress gold, you can't let silver skyrocket. So they suppress silver. But silver is easier to suppress because it's such a small market. they got used to being able to smash the price, scare the speculators out, and then they made a profit. But overall, it was not profit motivated. It was simply suppression motivated so that these governments, particularly the US government, could borrow in unlimited quantities. If gold and silver are not going higher, that means the thermometer is not showing a fever. So if you break the thermometer, you can say there's no fever, gold bad, dollar good. Now the thermometer is breaking. The paper contracts, they sold way too many. And we're at the point now where people are standing for delivery. And guess what? The metal doesn't exist to supply all these contracts that have been sold short. And now you're seeing price go higher and these banks are losing billions of dollars.
Bill Holter dives into the shifting mechanics of global currency, predicting a return to gold and silver-backed systems to restore lost trust. He highlights the growing divide between East and West, noting how nations like China view silver through a monetary lens rather than just an industrial one. As traditional buyers like Japan and China dump U.S. Treasuries, Holter warns that the Federal Reserve is now forced to print whatever it takes to backstop a ballooning government debt. But if the printing press is the only thing left, what happens when the world finally stops accepting the paper? Now, let's watch some clips from his interview.
Yeah, I'm not real big on platinum, palladium, just because they're not truly a precious metal. I mean, they are industrial metals. The gold to silver ratio got as high as 120. Now it's what, 63, 64, something like that. Silver comes out of the ground at 9 or 10 to 1 versus gold. And for hundreds of years, it was discounted to 16 to 1. The reason it was discounted 16 to 1 from 10 to 1 is that it took 10 times the amount of weight when you're moving either gold or silver. It took 10 times more silver versus gold to move the same amount of capital. So because it was more difficult to move silver, man discounted it to 16 to 1. Gold is the money of kings, the money of governments, if you will, and silver is the money of the people. And I do think that, especially China, but the East views silver more from a monetary mindset than Westerners do. So I think silver, and I'm not saying that silver and gold are going to become currency. They're not going to. You're not going to ever see convertible paper monies that are convertible to gold and silver, because they've already figured out when they do that, it converts, and then their supplies are wiped out. But I do believe that you're going to see governments back currencies with gold and silver, but not be convertible. Will be ratio back, 20%, 40%. I mean, I don't know what the number is going to be, but I do believe for a currency to be trusted, it has to have some sort of backing. And that's what the BRICS are doing. That's what the BRICS have been talking about, going on what, 6-7 years now. I think that's where we're headed, is toward a ratio-backed currency, and that backing will be gold and silver.
So what do you take of this whole stablecoin legislation that was passed? I mean, you had the Genius Act, and it seems like a rug pull in a lot of ways with the dollar, how they can get the demand for the dollar and devalue the dollar and everything. And so, just curious what you're thinking there.
That's all it is. It's artificial. It creates artificial demand for the dollar, because at this point, I mean, who are buying treasuries? Japan's not buying treasuries. They're selling them. China's not buying treasuries. They've been selling for a few years now. The demand for treasuries is no longer there, which leaves the Federal Reserve now not even a separate entity. Now it's underneath the Treasury umbrella. The Treasury, so it's the left pocket lending to the right pocket. That's the demand. So they had to do something, and that's what the stable coins are.
And how much printing of money? I mean, the Federal Reserve obviously they've positioned themselves to in quantitative tightening and then, position themselves to ease. They did just inject like 40 billion into the repo market and such. I mean, some people would say this is peanuts compared to COVID, but they are in position to be able to backstop the government. I mean, because the debt and the deficits continue to balloon and get way out of control. And so just curious in what your outlook is on the Fed.
A very easy and very short answer, whatever it takes. They will print whatever it takes. And I mean, 2008, 2009 should show you that.
Mm-hmm. Yeah.
The Federal Reserve lent, what was the number? $17 trillion, more than half of that outside of the US to support the system. And we didn't find out about that until 2010.
In closing, Bill Holter emphasizes that we are moving toward a cash and carry market where physical delivery is king. As paper contracts lose their credibility and inventories shrink, he advises investors to prioritize physical ownership over digital promises. He specifically points to junk silver coins as a practical, recognizable way for individuals to secure their wealth outside of the failing credit system. With the thermometer broken and the debt system at its limit, the ultimate question remains: will you hold real money before the music stops? If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.